this, I'll wake up at say, so market opens at 6:30 right here, right? Oh my gosh, it's so laggy whenever I record. But so right here at 6:30, the market opens, and so from market open, let me see if I can do a replay. Let me see how this works. No, it's not. Okay. Well, basically, we'll just act like none of this up here is here, right? So whenever market opens, I'll look back over here, and I'll see, okay, there was a good sized buying candle. So this is exactly what I did this morning. I said, all right, so the buying candle off of this little red one. I'm gonna open it up here. And I trade on the 5 minute, by the way.
Oh, okay.
The 5 minutes up here. 5 minute. All right. So I send this across, and then as you can see, we completely obliterated this zone, right?
Mm-hmm.
So if we came down right here and we continued below, I would have bought puts, right? But I usually don't trade right here. I try not to wake up at this early, or I'll be tempted to trade, right? So I try to wake up like at 7 o'clock, which is like right here.
Mm-hmm.
So when I would have woken up, I would have seen this. I would have drawn out this. This is a demand zone because there was a lot of demand right here, which shot the price up. So my first line would have been right here, boom. And so, because I would have woken up right here at 7,
Mm-hmm.
right here on this red candle, and so I would have seen this come down, hit, and then a rebound, right, and then a break through this demand zone, and then it played back down. But as soon as I saw that what's it called? It didn't run past where this support was, I would have known it was going to go back up, right? So another thing I do that I got advice from the guy who owns the Discord that I learned a lot from was to have the 5 EMA on and the 9 EMA on. So the moving average exponential, you click it twice, and you can do up to 3 indicators for free when you don't have the premium. But if you have the premium, you can do like whatever you want. So right here, the length is 9, and then right here, the length will be 5. So now you can see you have 2 different lines right here. See one down here and one up here. So what he doesn't use this to like track where he's gonna buy it. He uses it to see where he'll sell, right? So if I would have entered calls right here because it came back up to the supply zone and broke out and then opened outside of it, right? So or demand zone, I'm sorry. So whenever you're trading any type of demand zone, supply zone, support and resistance, you want to wait for a complete breakout. So as you can see right here, let's zoom way in. It's so laggy. So back here. So you can see right here, it's kind of consolidating right here. It's just staying inside, right? All these candles are touching. On this candle right here, it barely opened before it. So I would have waited for this candle to go all the way up, right? It would have came back down. And then we opened here. So then I would have bought in here because we opened completely above, right? So I would have bought in here, and then once I saw that we tested this EMA right here, so either of these EMAs, once we start testing, that's when I would have sold, right? And then say it tested and then it continued higher, I'd be willing to get in if we completely broke this high right here. So my target to get in would have been right there where this trend line is. Boom. No. Or whatever. You got to get the point. So then we touch this line right, and we sold. We would have sold right here, and then we would have seen that it would have played down, right? And I wouldn't have bought puts just because it touched the 9 EMA or the 5 EMA. I would have just sold my contracts and then went and just waited to see what it would have done, right? And then as you can see, we sold off and we broke below this demand zone. showing that price. Right here, the fact that we traded through it would have made the demand zone invalid, because once you trade through a demand zone or supply zone, it kind of shows that they're not there anymore, right? Because if it was a demand zone, that means we would buy off of it. But if it was a supply zone, we would sell off of it, right? So now it's neither, because it's just kind of playing through it. But I still leave it on there sometimes, because sometimes it can act as support and resistance. And so as you see right here, it can act as support, right? So now we're kind of looking at the day, and I'm very patient when it comes to trading. I try not to take too many trades a day, typically 1 or 2 trades. And so if I was really watching the market, I would have seen this, and I would have bought calls right here and sold them right there. And then and anyone could say, come on here and say this, right? That they're a genius, and they would just sell right here. They would buy calls right here, sell them up here, and they would buy puts right here and sell them down here, and buy calls right here and sell them way up here, right? But I mean, this is really what I would do, and this is really what I did this morning. I actually bought puts when we broke below, right here, because we closed down here, right? And then I waited for like a retest, but it ended up just kept going, right? So I lost actually a lot of money right there. But that's not what I would have done normally. I was just trying to do. I was first of all, I woke up too early, so I was trying to trade right away because I had work and stuff. So I was trying to get a play real quick before I went to work. But typically, I would not have done that. It was just my emotional state this morning. So as you can see over here, we came and we broke above the 9 EMA. So down here, you could see we had a big candle down off the 9 and 5 EMA, right? So it came below it, which is just kind of showing me that, okay, like we're just gonna be very patient. I'm just gonna wait. So this is what I would do. Other people are gonna tell you something completely different because that'll work for them, but this is what works for me, right? So I see that we're kind of just below the 9 EMA. So that's usually, once it retests, right, that's whenever you want to just get out of your position and just see what it does after that. So I would have been out, I would have just been seeing what it does, and there's nothing really here to tell you that, okay, we're going down, right? You could say that this is an evening star, but I mean, really, it's really speculative if you're going to trade right here. So I would have waited till he came down right here and seen something, right? And then we saw a big buying candle up past the 9 and 5 EMA into this same supply zone, or demand zone, I'm sorry. So this right now is acting as demand, or not, I'm messing up so much right now. It's support and resistance. So right here, you saw resistance, right? But then once we broke above, it became support. So it was struggling to get above, but once it got above, now it's probably not gonna go below, right? So once we see that it retests, and that we have say like a few buying candles right here, so then we see this really big one, then we're pretty bullish, right? And I'll be pretty bullish to say, okay, yeah, we're probably gonna go up from here. Yesterday had a huge jump. It was like a $20 jump on SPY, which is unheard of, and the banks were closed today, so I thought we were gonna be very consolidate a lot today based on just prior knowledge, but we ended up pumping, as you can see, almost 1%, $3.82. And then so once we got up here, I would have waited for to get to this level that we crossed earlier, and then waited for the retest, right? So it kind of retested it and then continued higher. So that's where I bought calls today, right there, right around this area. I was like, okay, I'm getting into calls, and that's how I made like my $100 right here. Ended up selling, and I actually sold on this red candle right here because it retested, right? And so I ended up selling it, continued a little higher before coming down and then turning up. But I also had a lot of levels from the prior days. So typically, whenever I go through, I just erase my levels, right? I go right here, remove 3 indicate. I usually remove everything and then just kind of go off of what I want to go off for that day. I usually have the 9 and 5 EMA on there, and I have support and resistance lines and supply and demand zones from the day, right? So usually this is typically what the morning looks like. I'll usually have like a supply or demand zone right here, a supply zone up here, and then I'll trade it right here, right? But I actually had a supply zone right here. Whenever I first woke up, I ended up making one right here. So Yeah, I had that right there, and the market was just behaving super weird this morning, so I didn't even really get to use these as much as I would usually. But yesterday, we had a lot. We have previous highs, which we haven't seen in a while, like at least a couple weeks to a month now. I don't remember how, like when the last time we had $400 was, or when the last time we were above 390 was, but it wasn't very. It was a long time ago. It wasn't that like we've been like at the 370, 360, 380 level for a while. So I had to go way back to find the levels that I was going to use yesterday because we were just pumping up, right? And so for today, I kind of just left those levels on there, which I usually wouldn't do, but since we're so high, like we're not at the norm right now, I decided that I was just going to say like, okay, I'm going to keep these levels on there from the day before just to see if because most of the time they'll act as support and resistance. Because what you have to realize is that like the institutions and the banks and the market makers, right, that move the market,
Mm-hmm.
they you want to be as predictable as possible because they're trying to predict what we're doing. So say I'm gonna say right here, okay, if we break below this supply or demand zone, we're probably gonna go farther down, right? And so, which we did, right? Almost it was a $2 drop to right there, but a lot of people bought puts on this breakout, right? So they're buying puts now, which I did this morning too. So all the market makers are gonna say, okay, if we can just break it below this zone right here where we bought all of it up, everyone's gonna think the market's gonna crash today because of the big pump yesterday. So we're gonna sell off a little bit, but then we're just gonna buy it all back up, right? And then everyone's gonna think we're gonna go up for the day. So now everyone's gonna buy calls, and then we're gonna push the market down. So everyone has to sell to us, and then we can just, make more money on the way down, right? So then they start crashing again, and so everyone thinks that this is a retest and a bull trap, and then they push it down again, right? And then from here, they just liquidate everyone, and then as you can see, for the rest of the day, we were just green pretty much before a little sell off at the end of the day, for people taking their profits. But so that's what you have to understand is that the market makers are trying to be as predictable as possible, so that the average person knows or thinks that they should get in at certain times, right? So the market maker can then flip it and manipulate it. So you have to think like everyone, but then you have to think against that as well. So say, okay, so this is right here is obviously going to be a good level, right? So right at this level is where that the big sell-off happened, right where this got rejected, right? This got rejected right there, and that's pretty much when the sell-off happened. So you could have kind of seen that this resistance held and then it sold off, right? And as you see, the support held and then it came up, right? So try to be as predictable as possible when charting. And a lot of people think that technical analysis is hard, but the drawing part is easy. It's the understanding what's going to happen from your drawings. That's what's hard because a lot of people don't understand the market makers are the market makers for a reason. They're going to manipulate this market to look like, we're going to come down to this level and then we're going to retest and then break down even farther, right? But no, they're going to push it up into a bull trap, then push it back down to think that we're going down, right? This looks like a retest. If you couldn't see any of this, you would think this is a retest, and then a push down, but in reality, it was a retest, another retest, and then up to the sky, right? So yeah, the main advice I have for technical analysis is, like I said, like I've been saying, be predictable, but then also know why it's so predictable. It's because the market makers want it to be predictable, so that the average person can think they know what's going to happen, but then the opposite will happen, and the market makers will take their money.
Okay.
But yeah, do you have any questions on anything I said? I know I talked for like 14 or 15 minutes right there, but
Um. No, I think I understand. I think I'm like processing everything.
yeah,
Yeah, but I'll like watch a YouTube video that on this.
okay.
Yeah.
Yeah, I feel like I talk in circles a lot too, so I'm gonna like practice on stopping like that. But hopefully I got like most of what I needed to say across and give you guys a little bit of a better understanding. And yeah, if you do have questions, you can either type it in the Discord or comment on the YouTube video or DM me or anything, we could also do another one-on-one. I like to do these one-on-ones because I can really explain it better than like typing it or like a YouTube video, right? Because if you have questions, I could just tell you right on the spot. But yeah. If you don't have any questions, I think that kind of wraps what I have to say about today up and like what I usually do.
Oh, okay. All right. I think I'm gonna start paper trading before like I actually like put in real money.
Yeah, man. I mean, I definitely recommend that. I think a lot of people say that with paper trading, the emotional part isn't there, which yeah, I agree with.
Mhm.
But if you're like a little bit disciplined, you should be able to overcome that. I think the main reason people fail when it comes to paper trading is because they don't understand the difference between a cash account and a margin account. So with the cash account, you can trade as many times as you want, but you can't reuse money. So say you spend $100 on a contract, and then you sell that contract for a profit of $20. So you have $120 like $120 in your account now. You can't buy another contract with that $120 until that money settles. And
Uh-huh.
then settling means that the money is just there, right? Because there's a bunch of money circulating, and so they really just are making sure that the money goes to the right place, the right places. But say you have a margin account, right? And a margin account, the whole thing with a margin account is like loaning out money and stuff, and then like leveraging it. Not even with options, because options is like leveraging on a whole new level than like leveraging your money with margins. So on a margin account, say you buy $100 contract and you sell it for $120, you can then reuse that $120 to buy another contract and then sell it, and then you reuse that money again, right? The only downside to that is you can only day trade 3 times per week or per 5 days. So
Mhm.
that there's a with the cash account you can trade as many times as you want, but you have to have the money for it. And then with the margin account, you could trade as many times or with as much money as you want, but you can only do it 3 times. But with paper trading, it's like a cash account and a margin account combined because you can trade as many times as you want without like being limited to 3. And then so like it's both, right? Because the cash account you can trade as many times as you want, but you can only use all the money you have. And then with a margin account, you can only trade 3 times, but you can reuse your money. So with the paper trading account, you can reuse your money and you could trade as many times as you want. So it's like the best of both worlds. And a lot of people aren't disciplined enough to say, okay, I'm I'm gonna act like it's a cash account, and I'm only gonna trade, with the money that I have, like, and I'm not gonna reuse the money. Or if you want to do a margin account in the future, you're gonna say, okay, I'm gonna trade as much as I want, but I'm gonna limit myself to 3 day trades per every 5 days, right? So I mean, that's why I think a lot of people fail is because they don't understand that with paper trading. But yeah, just know that, and then also you have to understand with paper trading the contracts kind of lag behind sometimes because it's not like right
Yeah.
away. But I mean, as long as you kind of have a good understanding of it, you'll be fine. And then it's just like a rough estimate of how you'll do, right? It's not like for sure. And
Yeah. Okay.
yeah.
All right. Thank you so much for like all that insightful knowledge.
No, yeah, it's no problem. But yeah, if you have any questions, just post it in the Discord or DM me or comment.
All right.
All right, man. Have a good night. Thanks.
You too.